So we are doing the chapter Backflash Costing System. Two more versions are there. Let us complete the discussion and problems regarding version 2 and version 3. Stop talking, please. Once we complete that, one problem from RTP also will be solving in this backflash costing system. Then we can have an introduction to the area total quality management. Please settle down, please. In the second session, we'll continue with the target costing. One more sum we'll do in this target costing area regarding process engineering. Then we'll have an introduction to the concept called as ABC, activity based costing, and start doing the problems in that regard. Once we complete the ABC, we'll have problems involving target costing with activity based costing. That will be the last issue to be discussed. Now, in the first slot, after completing backflash costing, I have only two more concepts to complete. One is total quality management, another is life cycle costing. With that, that also gets completed. That is strategic cost management will be getting over. Please, shh. When I complete ABC and target costing, the chapter also gets completed. We have only one more slot that is pending. That is the network updation. I want to do one problem. Then we'll be doing one problem in transfer pricing using calculus. With that, all the issues will be completed, which will be probably doing in the Tuesday's class. By Tuesday, we'll be completing the batch. Okay. And Tuesday, I will tell you how to go about the preparation for the examination. We'll be having a last 15 minutes reserved for that discussion. I'll tell you how to prepare and which area questions are generally asked, and the pattern of the question paper will be discussing in the Tuesday's class. Please. Shh. As I already said, the theories which are discussing mainly last few classes, rather than doing heavy calculation, it was more theoretical in discussion. That is important. Whatever I discuss is important, is being asked in the examination as an applied theory. Okay. Now, let us consolidate what is done in the backflash costing before I proceed further. Any notes I have given for backflash costing, or only some has been done? Okay. Now, I will do the remaining two problems and give a consolidated notes regarding everything regarding this backflash costing system. Now, please, well, silence here. Now, settle down, please. Shh. We saw that companies having just-in-time system can afford to go for a simplified cost accounting system called as backflash costing system. Traditional cost accounting system is very elaborate. It traces the cost to the stocks in a double entry basis. Lot of control over stocks is emphasized in the traditional costing system. So it is more elaborate, requires more manpower and administration resources to implement it. Since in just-in-time, stocks are ideally nil, or stocks may be very negligible compared to the total volume, it was felt that one need not have an elaborate cost accounting system where more emphasis is given on stock. We can have a simplified cost accounting procedure where a little bit control is lost over stock, agreed, but that is going to save lot of management time and administration resources in maintaining an elaborate cost accounting system. Such a system we call as backflash costing system. So, traditional cost account system has got 4 trigger points. How many trigger points? 4 trigger points. What I am discussing is predominantly manufacturing cost. Administration selling is a one entry issue, that's all. Manufacturing cost only goes into various stock items, I don't know. So regarding manufacturing cost, we have 4 trigger points in the traditional cost accounting system. Revising, please get into the mode. What are the 4 trigger points? Purchase of raw material and incurrence of conversion cost. Second trigger point is what? Issue for production. Third is what? Completion of goods. And fourth is sale of goods. When I purchase raw material, what the entry I pass? Raw material control account debit to general ledger adjustment or to cash. Whether it is non-integrated or integrated, it depends. Can I proceed? Now, when I pay for conversion cost, the entry is conversion cost to cash. Next, when the raw material is issued to production, when the factory we are producing, what is the entry? WIP to raw material control account and WIP to conversion cost. Because when the production is happening, I charge the wages, overheads and material to the factory. When the goods are completed, it goes out of the factory into warehouse or the entry. Finished goods to work in progress account. When the goods are sold, it becomes cost of sales to finished goods. Cost of sales is obviously transferred to the costing P&L account. The accounts which are maintained are raw material account, work in progress account, finished goods account, cost of sales account. Apart from that, routinely the conversion cost account, costing P&L account or all the other accounts that is going to be maintained. I think I will recollect or not? No. This is regarding the first system, namely the traditional costing system. Then we discuss about the backflash costing system. Backflash costing has got 3 versions in which we completed the version number 1. Version number 1 has got how many trigger points? 3 trigger points. Name the 3 trigger points. Purchase of raw material, completion of finished goods and sale of finished goods. Now, here, now can I proceed? Please. See, purchase of raw material, the entry is what? Raw material to cash, payment of conversion cost to cash. When I do production, will I pass any entry? No. I don't pass the entry for material consumption. I don't pass entry for the workers working and overhead costs incurred at the time of production. I'll pass the next entry only when the goods are completed. When I see the finished goods coming out of the factory, I come to know that these goods are completed. They should have consumed materials. They should have consumed wages and overheads. Hence, I pass an entry for charging the cost only on the completed goods. Tell me the entry what I pass is what? Finished goods to raw materials, finished goods to conversion cost. The finished goods pulls. The finished goods what? Pulls. Say what? The raw material cost and then conversion cost into it at the actual cost or at the standard cost. Standard cost. Actual cost difficult to trace because you are not issued for consumption. Yes or no? So it pulls through the cost into it at what cost? Standard cost. And once the goods are sold, the entry is obviously cost of sales to finished goods account, then gets transferred to the costing P&L account. Everybody, I think you are all following or not? No. In that we said conversion cost incurred and conversion cost charged to finished goods. The difference is called as what? Under absorption or over absorption, which is charged to the costing profit and loss account. Point number 1. Yes or no? No. Point number 2 is the raw material account. The raw material account shows a closing balance or not? No. For example, in that problem we had 20,800. 20,400. 20,400 is a raw material in stores. Raw material in stores and inside WIP. In stores and inside WIP. Hence we call the account as what? Raw material and in process control account. Everybody understanding or not? No. Nobody will be having a control over it, obviously, because I charge the raw material to finished goods based on the standard consumption. So the balance 2,400 may be remaining in stores, may be remaining in what? Factory inside WIP, might even be what? Lost. Nobody knows what happened to the raw material except that we have a lack of control over what? Raw material in this backflash costing system. Point number 2. Yes or no? Now, tell me why we lose control? No problem, because the raw material is around 27,50,000 is a quantity purchase. But what is remaining is only just around 20,000 and odd. Due to materiality, I don't want to have an elaborate system in maintaining the stocks. Hence, I lose the control over the raw material. Is the answer given for that response? Yes or no? No. Next is, I charge the finished goods, the raw material at standard price, at standard quantity. That is, suppose 1 kg, the 1 unit, 2 kg standard quantity, and the standard price is 4 rupees. That means every unit will be charging how much rupees? 8 rupees. If I consume more than 2 kgs, actually there's an adverse quantity variance or not? There's an adverse usage variance. We have purchased more than what? 4 rupees, and we are having an adverse price variance. The question is, what happens when there is a variance? Because the finished goods takes only what cost? Standard cost. What happens to the variance? My first answer is, variance should not be there. An ideal just-in-time system can never afford to have what? Variance. Price variance will not be there because I don't order every time. The order is negotiated what? Beginning of the year itself. So there is no negotiation taking place throughout the year. The supplier will be agreeing to supply at what? The standard price only. Everybody understand what I am saying? And usage variance cannot be afforded because when you overuse, you don't have a material once again to do because you purchase just in time. Are you understand what I am saying? So in case of usage variance, the entire production gets what? Stopped. That is why we said that we should be having a separate scrap controlled report that's going to capture the usage variance properly, immediately report through the mission cells. Are you following what I am saying? And the usage variance can be immediately reported and can be rectified is the other issue which we have discussed. Everybody understanding up to this or not? Now, with this we have completed the version 1 of Backflash Costing system. Or else getting into the mode of the discussion or not? Now, next. Version 2. Okay. Version 2 says, version 1 elaborate. Okay. No need to have 3 trigger points and all. Let us have only what? 2 trigger points. That's what I am saying. Now, so no need to have 3 trigger points. Make it much more what? Simpler. I'll be having only how many trigger points? 2 trigger points. Traditional costing system, 4 trigger points. Version 1 of Backflash Costing, 3 trigger points. Version 2 is much more simpler. And only how many trigger points? 2 trigger points. Entry is passed when I purchase raw material. Number 1. Yes or no? When I consume, no entry. When I complete finished goods, no entry. The next entry is what? When the goods are sold. Yes or no? When the customer is taking in his hand the finished goods, I say, he is taking my goods. Yes or no? This should have been what? Produced. It cannot be coming there by magic. It should have been what? Produced. Since it is produced, it should have consumed what? Material. Pause the entry for the consumption of material, incomes of expenses, not when I am producing, or not when I have completed production, only when I what? Sell the goods, I pass the entry for consumption. Everybody are you following what I am saying? Because the answer is very simple. In a just-in-time system ideal, there will be no finished goods inventory. I only finished as a product produced for what? Sales only. Even if there is a finished goods, inventory is going to be very, very negligible amount. See, in this problem, 26,800 units is annual production. Yes or no? In the only how many units finished goods? 400 units only finished goods. For the 52,000 rupees in lakhs of rupees, should I have what? An efficient control system? No. Let me dispense with that. Let me go for what? A much more simpler version. That is called as what? Version 2 in Backflash Costing system. Everybody following up? Okay. In version 2, will I have raw material account? Yes. Will I have conversion cost account? Yes. Will I have work in progress account? No. Finished goods account? No. Next is what? Cost of sales and costing P&L. Only 4 accounts. What are the 4 accounts here? Raw material, conversion cost, cost of sales, costing P&L. Because I don't pass entry for doing the production, so no work in progress. I don't pass entry for what? Completion of goods, no finished goods. I pass the entry only when I what? Sell the goods. Straight away the consumption is passed only during the sales. Cost of sales is the first entry. Everybody, are you following what I am saying? This is what version? Version 2. In this also one issue is involved. I'll discuss it at the end of the problem. Everybody understanding or not? Now, you tell me the journal entry. Now, version 2, you should tell me the entry. First, metal has been purchased. What is the entry? Raw material to cash. Conversion cost paid. What is the entry? Conversion cost to cash. Yes or no? No. Metal consumed. Goods completed. Goods sold. What is the entry? Cost of sales to raw material, cost of sales to conversion cost. That is the sold units pulls through the system the raw material cost and then what? The conversion cost. Enough for it or not? No. And from that it goes to what? Costing P&L, the cost of sales. Conversion cost, debit side, say credit side difference is called as what? Under or over absorption. It is transferred to the costing, profit and loss account. Everybody understanding or not? No. So can we do the next sum or not? No. Next sum is about version 2. Okay. After I complete the 3 problems, I'll dictate the notes. Any notes about versions given? We just did what? Question number 1. That's all. Right? Next. Take question number 5. Please don't talk. Take question number 5. Assume the same facts as question number 4. You should be knowing the facts of question number 4. I just tell once again before I proceed. Question number 4, all of you tell me, what is 27,54,000 rupees? Sollupa. What the number? Raw material purchase. What is 27,33,600? Raw material use. What is 723,600? Conversion cost incurred. What is 750,400? Conversion cost absorbed. These are all things given in the question number 4. Yes or no? Now, mainly how many units I produce? 26,800. How many units I sold? 26,400. Every unit, the standard raw material cost 1 or 2. The standard conversion cost 27 or 28. And the actual conversion cost is 27. Hence I had a over absorption. Do you all remember those numbers or not? Now, let's go to question number 5. Assume same facts as question number 4, except for the following change. Road Warrior Corporation now use the backflash costing system with the following 2 trigger points. Purchase of direct raw materials, sale of finished goods. The inventory control account here will include direct material purchase but not at in production, metal in work in progress and metal in finished goods but not at sold. No conversion costs are inventory. Any under or over allocated conversion costs are written off to monthly costing P&L account. Required prepare necessary ledger accounts. Now, in this problem, I have to explain you 2 sentences. Question A. Inventory control account include direct material purchase or not at say issued in production, materials in work in progress and also what? In finished goods. Next is conversion costs are not inventory. Okay. Once I complete the third part, I'll tell you how the conversion cost is say treated differently in version 2 compared to version 1 and version 3. All this will be the last stage conceptual discussion. Can I proceed or not? No. But now we are here only to pass the journal entries and prepare the ledger accounts. Now tell me, how many trigger points are there? 2 trigger points. What 2 trigger points? Purchase and sale of finished goods. How many accounts are there? 4 accounts. Name the 4 accounts. Raw material account, cost of sales account, conversion cost account, costing P&L account. Can't we do all the 4 together or not? Now let's start doing the solution together. Okay, now. Okay, question number 5. Please open the accounts quickly. Raw materials, cost of sales account, conversion cost account. Costing P&L you cannot prepare because you don't have the sales to find out the profit, right or not? Just it comes in the double entry, that's all. So raw material, cost of sales and conversion cost account. Shall we start? No need to post entry, open the accounts. Okay, now 3 accounts are opening for that so long. Please don't give brown color, red color, etc. Don't draw lines. Effectively open the accounts. Can I start? Please. Can I start or not? Now, first. Okay, now. Purchase of raw material. What is the entry? Raw material to cash. Right? Raw material to cash. Tell me the amount. 27,54,000. 27,54,000. Payment of conversion cost. What the entry? Conversion cost to cash. What the incurrence of conversion cost? 7,23,600. 7,23,600. First entry is over. Raw material is issued to production. Workers are going and working in the factory. Any entry? No entry. Goods are completed. Any entry? Goods are sold. Any entry is there? Yes. When the goods are sold, on that I should have incurred some cost or not? No. I should charge a cost to the sold goods. The unit sold pulls the cost in the backflash costing system. It pulls actual cost or standard cost. Standard cost for the unit sold. Every unit sold pulls what? Standard cost through the system. Everybody, yes or no? No. Write down cost of sales account, right? To what? Raw material account. You should do along with me, tell the calculation, cost of sales to raw materials. In bracket, write the calculation. What into what? 28,000, please. 28,400 units. 26,400 units. Into how much rupees? 102. 26,400 units into 102. 26,400 units are sold. They are say pulling through the backflash costing system. 102 material standard cost. Tell me what's the amount? 26,92,800. 26,92,800. Everybody yes or no? Now, next entry is what? Cost of sales to conversion cost. Cost of sales to conversion cost. Cost of sales to conversion cost. If that is in bracket, right? How many units? 26,400. Correct? Into how much rupees? 28. Each unit pulls how much cost? 28 standard cost into it. Tell me how much is the amount? 7,39,200. 7,39,200. 7,39,200. Are you all understanding it or not? No. Next. Complete the double entry. Raw material account by cost of sales. It is 26,92,800. So complete the double entry, please. By cost of sales 26,92,800. In conversion cost, complete the double entry. By cost of sales 7,39,200. By cost of sales 7,39,200. Now respond, yes or no? No. What is the cost of sales total? 34,32,000. The total cost of sales is 34,32,000. Tell me, this is now going to what account? Costing P&L. The cost of goods sold expires or not? So by costing P&L account, 34,32,000. By costing P&L account, 34,32,000. 34,32,000. I hope you are all understanding it. Now, next, we have to complete the other accounts. Now, raw material account total. What is debit side total? 27,54,000. Debit side total is 27,54,000. And credit side also 27,54,000. Tell me the closing balance. By closing balance, what's the number? 61,200. The closing balance is 61,200. 61,200. Now, let's understand this before I proceed. 61,200 closing balance shown in this account or not? It is raw material as what? Raw material. Raw material inside work in progress. Raw material inside finished goods unsold. Yes or no? Because the consumption entry has been passed only for the unit sold. I have not passed the consumption entry for what? Work in progress units consuming raw material. I have not passed consumption entry for what? Finished goods units consuming raw material. These two have consumed raw material now. So now raw material will be in how many places? 3 places. Raw material as raw material in the store unconsumed. Raw material in what? Work in progress consumed by WAP. Raw material inside what? Unsold finished goods. Sold finished goods raw material has been already what? Absorbed and transferred to the costing P&L account. Respond. Are you following what I am saying? So this is regarding the meaning. Now if you read the sentence in the workbook, you'll be able to understand it. The question makes it clear like this. What they say? The inventory control account. That means what? Raw material and in process account. The inventory control account here will include what? Direct material purchase but not yet in production. Unconsumed raw material. Next is what? Material in work in progress and material in finished goods but not yet sold. Everybody understanding this particular sentence or not? No. Since this is a continuation of the last problem, I have a numbers to confirm it. Can I proceed? Now, let's confirm. Tell me, how much is a raw material having in the raw material control account? 61,200. Now, please. 61,200. Now, I branch it into two. It is two things. One is raw material as what? Raw material and in what? Work in progress. Next is what? Raw material in finished goods. Now, if you see the previous version, I know what is raw material as raw material, what is raw material inside of what? Work in progress. Raw material in process account. Now, tell me what is previous sum closing balance? 1%? 20,400. 20,400 is raw material as raw material inside of what? Work in progress. Now tell me, what is raw material inside finished goods? 61,200 minus 2,400. 40,800. How I got it? If you know, I have produced 26,800. I sold only what? 26,400. How many units are there? Into how much base? 102 standard cost gives how much base? 40,800 is the raw material inside the finished goods. Everybody, yes or no? No. Tell me, 61,200 raw material is or not? How much is as raw material inside WAP? 2,400. And what is inside finished goods? 40,800. Tell me, how I got this number? Because of version 1. If I follow version 2, I will never get up a breakup of 61,200. Since we did question number 4, there we had this number. If I do only version 2, if I do what? Only version 2, what happens is, I will not keep track of units produced and all. Yes or no? First of all, purchase. Next is what? Sold only. When I have 61,200, I will not be able to say how much is inside stores, how much inside what? WAP, how much inside what? Finished goods, how much has been stolen. Yes or no? I don't know about it because I lose more control over raw material because I don't even pass an entry for consumption by produce units. Everybody, yes or no? No. This I am able to do because we have a knowledge of what? Question number 4 data, okay. But in the real world, they don't follow version 1. They follow what? Version 2 if they follow. They don't have the details regarding what? Raw material in process inside WAP. I can never find out this particular number. Everybody, are you understanding it or not? No. Tell me in version 2, the control is more or less? Less. There, only 20,400 stock, I don't know what has happened. Here I don't know what has happened. How much stock? 61,200 rupees what stock. Still they feel that out of 27 lakhs rupees and all, this is going to be what? A very small amount only. They felt that let us dispense with such a high procedural system and go for a simplified system. Is what we call as version 2 of Backflash Costing system. Everybody understanding it or not? No. This notes I'll give you at the end of the version 3 once I complete the chapter. Can I put or not? Now, one more version is what is the version? Version 3 in this Backflash Costing system. Now, first of all, before I go to version 3, we should consolidate or not? Tell me. Traditional costing system, how many trigger points? 4. All of it are the 4 trigger points. Purchase of raw material and incurrence of conversion cost. Second is what? Issue for production. Third is what? Completion of goods. And fourth is what? Sale of goods. Yes or no? No. What all the accounts maintain? Raw material, work in progress, finished goods, cost of sales, conversion cost, costing P&L. Right or not? No. Version 1, how many trigger points? 3. What are the 3 trigger points? Purchase of raw material, incurrence of conversion cost, completion of goods, sale of goods. What are all the accounts I maintain? Raw material, finished goods, cost of sale, costing P&L. And conversion cost. Sorry, I don't have what account? Work in progress account. Tell me version 1 entries. Purchase of raw material to cash. Conversion cost incurred, conversion cost to cash. What is the entry for consumption of raw material? No entry. Completion of goods. Finished goods to raw material, finished goods to conversion cost. It absorbs at what cost? Standard cost. Completion of goods. Cost of sales to finished goods. Cost of sales transferred to costing P&L account. Conversion cost balance transferred to costing P&L account. Raw material account balance shows what? Closing raw material as raw material and inside work in progress. This is version 1. Yes or no? Version 2. Tell me how many trigger points? 2 trigger points. What are 2 trigger points? Purchase of raw material, sale of finished goods. We don't have in between consumption for WAP and completion of goods. What the entry for purchase of raw material cash. Obviously conversion cost to cash. Any entry for issue for production? No. Any entry for completion of goods? No. Any entry for cost of goods sold? Yes. Entry is what? Cost of sales to raw material, cost of sales to conversion cost. It pulls the cost at what cost? Standard cost. Cost of sales amount transferred to costing P&L. Raw material account balance shows what? Raw material as raw material inside WAP, raw material inside finished goods. Version 2 is having a lesser control compared to the version 1. Everybody understood up to this or not? Can I proceed? Now. Version 3, okay. Version 1, 3 trigger points. Version 2, how many trigger points? 2 trigger points. What is version 3? 1 trigger point cannot pass an entry. It is also going to have what? 2 trigger points, but different 2 trigger points. Everybody following or not? Now, please. Stop talking. I pass entry when the goods are completed. Next entry when the goods are sold. I don't pass entry for purchase of raw material. I don't pass entry for what? Purchase of raw material. I pass entry only when the goods are what? Completed. And the completed goods are sold next. In this, we don't have the follow. What accounts we have? Will you have raw material account? No. We don't have raw material control account. Do we have work in progress account? No. Do you have finished goods account? Yes. Cost of sales account? Yes. And then what? Costing P&L account. So we don't have a stores account at all. We don't have stores account. Neither we have what? Work in progress. We have finished goods and then cost of sales account is another version of backflash costing system. Let us see how this works through a next problem. Everybody, are you following or not? No. In this one, discussion is going to be made. I'll do it at the end of that particular sum. Okay. Now, take question number 6. Take question number 6.
Previous problem not completed.
What not completed here?
Conversion cost account.
Okay, not completed. Sorry. Okay, now. Conversion cost account by the total. Now, previous sum. Okay, close it. 7,39,200. Nothing is closed. Okay, 739,200, 739,200. To what? Costing P&L. How much is transferred? 15,600. To costing P&L, 15,600. Over absorption, transfer 15,600. Now completed or not?
Yes, sir.
Okay, next. Take question number 6. What happens here? Now, please, atrocious. What is that to copy here? Balance transfer to costing P&L. Are you understanding? Can I proceed now, please? Shh. Wait. Shh. Take question number 6. Don't talk, please. Take question number 6. Stop talking. Shh. Question number 6. Assume same facts as question 4. Except now road warrior use only 2 trigger points. The completion of finished units of product and the sale of finished goods. Any under or over-absorbed cost are written off to monthly costing, profit and loss account. Required prepare necessary ledger accounts. Can you start or not? No. Please. Wait, please. Shh. Okay, can I proceed? Please. Shh. Question number 6. Open the accounts. For the first account, finished goods account. Please, quickly, finished goods account. Second account is cost of sales account. Third account is conversion cost account. Finished goods account, cost of sales account, and then conversion cost account. Shall we start up? Okay. Now, tell me. Please, show some urgency in copying. Open 3 accounts here. If you do like this, when you will complete accounts paper, I am afraid, okay. will complete accounts only SFM exam over. Correct? Please. Now, can we start up? Purchase of raw material, any entry? No. But incurrence of conversion cost? Yes, we have to pass. What identify conversion cost paid? Conversion cost to cash. Please. Conversion cost to cash. Tell me how much is conversion cost incurred? 7,23,600. All of you, 723,600. Now, any entry for issue for production? No. Completion of goods? Yes. When finished goods are completed, when I see the completed goods going out, I tell that this should have consumed raw material. Further, I should have purchased, or not? So I pay cash only when raw material is what? Completed and consuming the finished goods. Everybody following or not? Now, so finished goods account to what? Cash. Is the amount that is settled to supplier. Based on the finished goods produced at standard cost, I will settle my supplier. That's a discussion to be made here. I will discuss at the end of the problem. Okay. So I will settle my supplier for the actual quantity purchased or standard quantity. Standard quantity. I will not settle for the actual quantity. Everybody follow what I am saying? I will tell you the reason later. So to cash, how many units produced? 26,800. Into how much rupees? 1 or 2. Tell me what is to cash? 27,33,600. 27,33,600. To conversion cost. Finished goods consumes conversion cost at 28 rupees into 26,800. Tell me what is the consumption? 7,50,400. 7,50,400. Double entry complete for the conversion cost. Buy finished goods. Buy finished goods. What amount? 7,50,400. By finished goods 7,50,400. Everybody yes or no? No. Next is, now the finished goods are now sold or not? What the entry for cost of sales? Cost of sales to finished goods. Okay. Now, by cost of sales, tell me how many units sold? 26,400. What is the standard cost of sales per unit? 130. 1 or 2 for material, 28 for what? Conversion cost. Please multiply and tell me 26,400 into 130. Tell me the number. 34,32,000. 34,32,000. I think you are all understanding or not? No. To finished goods account 34,32,000. To finished goods account 34,32,000. Finished goods account closing balance by balance carried down is 52,000. What is 52,000? Standard cost of unsold material, unsold finished goods. How many units unsold? 400. At what cost? 130. We want in bracket right 400 units into 130. Bracket right 400 units into 130. Now, cost of sales amount should be transferred to what account? Costing P&L. By costing P&L 34,32,000. By costing P&L 34,32,000. That account also is closed. By costing P&L 34,32,000. The account is closed. Can I proceed up? Now. Conversion cost account, debit side is incurred, credit side is what? Absorbed. Difference is what? Over absorption. So to costing P&L transfer the over absorption 26,800. To costing P&L transfer the over absorption 26,800. Transfer 26,800. 26,800. Respond everybody. Are you comfortable or not? No. With this we complete this version 3 of what? Backflash costing. One discussion to be made. I will discuss and give a very elaborate notes about whatever has been discussed in this backflash costing till now in all the 3 versions. Okay. Now, first of all, supplier is paid for purchases or consumption. Normally, I purchase 10,000 kg. I consume only 8,000. Will I pay for 10,000, 8,000? 10, he said, you consume, put in dustbin, no matter, I will pay you, I will ask you money for what? The entire amount, quantity supplied, yes or no? No. See, in this version, I will pay my supplier not for the quantity supplied, I pay for the supplier only for the quantity consumed. I don't pay the supplier for the quantity consumed, I pay the supplier only for the standard quantity consumed. Are you following what I am saying? The atrocious, na? Yes, correct no? This is what we call as reliable supply. Listen here. Now, I produce 26,000, for example, how many units? 26,800 units. I produce 26,800 units. Now, just for the sake of understanding, Suppose every unit consumes 2 kg. How many kgs here? 2 kgs. Multiply and tell me 26,800 should have consumed how many kgs? How many kgs here? 53,000 kgs. Okay. It should have how many kgs? 53,000 kgs. Now, I will pay my supplier a check for 53,000 kgs at standard price. I might have consumed 54,000 or 55,000 kgs. I might have purchased 58,000, 59,000 kg. No problem. I pay him check only for what? The 53,600 kg that should have been consumed. I will not pay for any excess. Yes or no? This is what you see in study material also one line given. That is what is elaborated here. In just-in-time system, big companies and all negotiate with the supplier for the raw material supplier adjusted for defects in production. That is, I will not pay him for any production defect which happens due to what? Raw material. Everybody following? Please tell me yes or no. Then only he will be supplying the correct quantity without any scrap. Duty is raw material. If I have what? Defect in my production, I have to consume some more extra kgs. Now, I will not pay for his kg because he has defaulted in his commitment. Respond, yes or no? I pay only for him the standard quantity. If I consume more, I will not pay for that. Now the question is, sir, how you say? Because that may be due to my mistake also. If the production is happening, it may be due to what? My mistake also. Correct? That is where scrap reporting is a very important part in the machine cell. One should tell the reason why the production has become bad. Okay, when a scrap arises, suppose I am producing that is I am producing just in time and I will not complete my production in spec. Correct? See, what happens is, normally what happens, a batch will be produced, 1,000 units will be put into the machine. Raw material will be put into the machine. 1,000 units gets what? Produced, get transferred to what? Next department. Further process becomes output. Yes or no? In that, this is called as batch processing. What processing? Batch processing. In batch processing, when 1,000 units are produced in one stroke, what happens is, some 100 and 150 units can be what? Bad. Yes or no? That bad units will not be found out during the production, will be found out only after production is what? Completed, because huge inspection is involved. Everybody follow what I am saying? Now, in just-in-time system, it is not so. A single person is made responsible for the machine cell. Now, so every unit going into the first machine till it comes out of what? Third machine, he will be closely monitoring. He will be closely what? Monitoring. First machine defect arises. Defect arises in what? First machine, immediately have to report the scrap. Now, when he reports the scrap, you should tell why that is, he will immediately stop the production. Immediately what? Stop the production. Should not allow the next unit to what? Go into the machine. Immediately what? Stop the production and see the reason for what? Defect. So the defect is due to the poor quality material or the poor machine setup. So some reason will be for defective or not. Now, he should not allow the production to continue by taking a defective material out. He should stop everything immediately and see the reason for defect. Do a scrap reporting. It is due to raw material. He'll say it is due to what? Poor quality, I won't pay him. Yes or no? If it is due to what? Machine setup, then it will be variance against what? The setup team who is in charge of what? Repairs and maintenance of machine. Everybody, are you following what I am saying? In such a case, I'll immediately stop and the scrap will not be huge. The scrap will not be what? Huge. Because first instance, when I see a bad thing, I stop my production, I rectify, and then only what? Continue my production. Everybody, yes or no? Now, suppose a mistake happens in second or third mission, I cannot blame my supplier. Everybody, are you following what I am saying? Now, this is what we call as a scrap reporting. Now, the question is, in the main system, I pay only for standard quantity. In the scrap reporting, suppose 100 kg extra I consume due to my what? Poor production efforts, then I'll pay for that separately, book as an abnormal loss. Everybody follow what I am saying? It will not come into what? The stock procedure. The stock will be having only what? Standard quantity. Scrap reporting analyze the reason for the scrap. Whatever reason for the scrap arises, that reason will be what? Stated, and the amount will be transferred to the abnormal loss account. There's nothing called as normal scrap because just in time cannot have a normal loss, cannot afford to have what? Normal loss. It should be a perfect production system. Everybody, are you following what I'm saying? So now tell me, I'll normally pay the supplier only for what quantity? Standard quantity. I will not pay for the actual quantity because he should be delivering defect-free goods. And due to his defective goods, my production consumes more. I will not pay for the extra consumption. Right or not? Now, If it is due to my mistake that the production consumes more raw material, the scrap reporting will be telling that reason, and from that I'll be able to find out what is the reason for the overconsumption of raw material. If it is not due to his fault, I'll be paying him through what? The scrap report and booking as a abnormal loss. Otherwise, I will not pay him for the particular raw material that has been supplied. Everybody understand what I'm saying? Then only version 3 can be what? Okay. Here I will not pay him when I consume. I pay him only when what? The goods are coming out after the production is completed. I think you're all following what I'm saying? No. This is what is the deep meaning of the word called as reliable supplier. Everybody are you following or not? Now, with this we complete this version 3 also. Up to this, everybody having the clarity now. There is one discussion to be made. How conversion cost is treated? Whether it is a product cost or period cost, under 3 versions. An important concept to be discussed. I'll discuss it at the end. First, I'll complete all the notes. I'll discuss it towards the end and give the notes for that also. Can I start or not? Now, let's have a brief notes regarding this backflash costing system. Can I start or not? Write down notes. I think this solution has been copied. Okay, write down notes. Point number 1. Point number 1. Point number 1. Traditional costing system. Traditional costing system meticulously traces. Traditional costing system meticulously traces the various cost items into inventories. Traditional costing system meticulously traces the various cost items into inventories. Meticulously traces the various cost items into inventories. Various cost items into inventories. Can I proceed on? Now. The system ensures, continue, the system ensures high degree of inventory control. The system ensures high degree of inventory control. The system ensures high degree of inventory control. High degree of inventory control. Point number 1. Everybody understanding or not? Next. Point number 2. The traditional costing system operates with. The traditional costing system operates with 4 trigger points. The traditional costing system operates with 4 trigger points. The traditional costing system operates with 4 trigger points. A trigger point is an event. A trigger point is an event which makes cost accounting system. A trigger point is an event which makes the cost accounting system pass. A trigger point is an event which makes cost accounting system pass. Pass what? Journal entries. Which makes cost accounting system pass journal entries. Can I proceed? Point number 2 or 3? 3. The 4 trigger points are. The 4 trigger points are A. Purchase of raw materials. A. Purchase of raw materials. So leave conversion cost, that is common for all. Okay, you can leave it. Okay. A. Purchase of raw material. B. What? Issue for production. B. Issue for production. C. Completion of finished goods. C. Completion of finished goods. And D. Sale of finished goods. And D. Sale of finished goods. D. Sale of finished goods. Continue. The accounts maintained are, same point, the accounts maintained are, again I say, purchase of raw material, issue for product consumption of raw material, issue of production. Third is what? Completion of finished goods. Fourth is sale of finished goods. Up to the finish writing or not? Now, same part you continue. The accounts maintained are raw material control account. The accounts maintained are raw material control account, comma, raw material control account, comma, WIP control account, comma, finished goods control account, and cost of sales account. Conversion cost and costing middle are routine accounts. I don't want to bring it here, okay? And cost of sales account. Everybody understanding it or not? Now, next point number 4. Companies operating just-in-time system. Ideally will have no inventories. Or very negligible inventories. Good system should have what? Zero inventory, but it can also have what? Negligible inventories. Hence, there is no necessity to have an elaborate cost accounting system. That traces cost to the stocks, and controls stocks. Everybody, are you following or not? So, we need not have such an elaborate system. A simplified system is called what? Backflash costing system. The simplified system is called backflash costing system. Next point number 3 or 4? 5. There are 3 versions in backflash costing system. There are 3 versions in backflash costing system. Branch it into 3. Version 1, version 2, version 3. Branch it into 3. Version 1, version 2 and version 3. Please. Version 1, put that down here, I can draw 3 trigger points. Version 1, put it down, I can draw 3 trigger points. Underline that. In the right, A. What the first point? Purchase of raw material. In that A, purchase of raw material. B is what? Completion of finished goods. And C is what? Sale of finished goods. Purchase of raw material, completion of finished goods, and then sale of finished goods. Next, accounts. Next is accounts. Tell me the account names. What are the accounts here? Raw material and in process account. The name should be written correctly. Raw material and in process account. Next account, please tell me what is that? finished goods account. Then we have cost of sales account. Cost of sales account. Costing P&L conversion cost or routine, leave it. Cost of sales account. Raw material and in process account. Raw material and in process account. Finished goods account. Cost of sales account. Cost of sales account. There is no what account? Work in progress account. There is no work in progress account. There is no work in progress account. This is version 1. Can I proceed? Now, go to version 2, put a down here and write. How many trigger points? 2 trigger points. Version 2 will be having 2 trigger points. Can I start or not? Now, first is A is what? Purchase of raw material. Purchase of raw material. The second trigger point is what? Sale of finished goods. Sale of finished goods. Next, accounts. Next is accounts. What are the accounts here? Raw material and in process account. Raw material and in process account. Next account is what? Cost of sales account. Raw material in process account and then cost of sales account. We will not be having what? Finished goods and work in progress, right? There is no finished goods and WIP account. There is no finished goods and WIP account. Can I proceed or not? No. Third, version 3. Go to version 3. How many trigger points? 2 trigger points. There are going to be 2 trigger points. What are 2 trigger points? A, what is that? Completion of finished goods. And B is what? Sale of finished goods. A, completion of finished goods, and B is sale of finished goods. Accounts. Accounts. What are the accounts? Finished goods and cost of sales account. Finished goods and cost of sales account. No, what account? Raw materials and work in progress accounts. No raw material and work in progress accounts. No raw material and work in progress accounts. Everybody, are you understanding it or not? Now, next. So this is point number 4 or 5? Point number 5. Next, right? Point number 6, please. Point number 6. In version 1, consumption of raw material. In version 1, consumption of raw material and charging of conversion cost. Consumption of raw material and charging of conversion cost. Consumption of raw materials and charging of conversion cost happens not during consumption of raw materials and charging of conversion cost happens not during production, but recognized only on what? Completion of goods. But recognized only on completion of goods. But recognized only on completion of goods. Everybody following or not? No. The completed goods, continue. The completed goods pulls. It's called as pull approach. The completed goods pulls. It pulls what? Standard cost. The completed goods pulls the standard cost of raw material consumed and conversion cost. The completed goods pulls the standard cost of raw material consumed and conversion cost. Pulls the standard cost of raw material consumed and conversion cost. Of raw material consumed and conversion cost. into production. Into production. Everybody, are you following what I am saying now? Next. Point number 7. In an ideal just-in-time system, there should be no price variance. In ideal just-in-time system, there should be no price variance because negotiation with supplier happens. Because negotiation with supplier happens at the beginning of the period itself. Negotiation with supplier happens at the beginning of the period itself. At the beginning of the period itself. Negotiation with the supplier happens at the beginning of the period itself. This point, understand or not? When I am preparing budget, I prepare the budget only after negotiation with the what? Supplier at the beginning of the period itself. Everybody yes or no? Now, continue. There should also be no usage variance. There should also be no usage variance. There should also be no usage variance. There should also be no usage variance because in just-in-time, there is no time available to rework scraps and defectives. In just-in-time, there is no time available to rework scraps and defectives. There is no time available to rework scraps and defectives. There is no time available to rework scrap and defectives. Everybody are you following or not? That is, you cannot have an usage will happen only when there is a defective or what, scrap, etc. There is no time to rework scrap and defectives. Still, if it arises, a separate scrap reporting system, should capture it. A separate scrap reporting system should capture it. Capture means what? What has happened, it should be getting it. Should capture it and transfer to what account? Abnormal loss account. A separate scrap reporting system should capture it and transfer to abnormal loss account. So we answered why I charge standard consumption at standard price. The reason is what? Price variance should not happen. Usage should not happen. If they happen, immediately what? Transfer to the abnormal loss account. Everybody understanding this or not now? Next point. Point number 8. Please. Point number 8. In version 3, version 2 need not be explained, that is understandable, okay? In version 3, the suppliers are paid. In version 3, the suppliers are paid only for standard consumption. The suppliers are paid only for standard consumption. Did you understand or not? Because it is finished goes to cash. I pass or not? The suppliers are paid only for standard consumption. Any excess consumption reported in scrap reporting, any excess consumption reported in scrap reporting system, should be analyzed for reasons. any excess consumption reported in scrap reporting system should be analyzed with reason. Full stop. If it is due to poor quality raw materials, the supplier will not be paid. If it is due to poor quality raw materials, the supplier will not be paid. If it is due to poor quality raw material, the supplier will not be paid. And if it is due to other reasons, if it is due to other reasons, they will be paid on the cost booked to what account? Abnormal loss account. They will be paid on the cost booked to abnormal loss account. Everybody, are you understanding this or not? Now, next. Point number 7 or 8? Point number 9. In version 1, the closing balance of raw material represents what? Raw material as raw material. The closing balance of raw material represents raw material as raw material. The closing balance of raw material represents raw material as raw material. And raw material in work in progress. You can write the abbreviation RM for raw material, etc. Are you following not? And raw material in work in progress, please. And raw material in work in progress. Can you understand not? Now, continue. In version 2, please. In version 2, the 61,200 rupees. In version 2, the 61,200 rupees raw material closing balance. The 61,200 rupees raw material closing balance. The 61,200 rupees raw material closing balance represents raw material as raw material, comma, in work in progress. Raw material should be understood. Raw material in work in progress and in what? Finished goods. Raw material as raw material in work in progress and in finished goods. Everybody understanding this or not? Now, in center right, 61,200. Please. In center right, 61,200. Branch it into 2. 61,200, branch it into 2. First branch, 61,200, branch it into 2. First branch, raw material as raw material in WIP. Raw material as raw material and in WIP. 20,400. Raw material as raw material in WIP. 20,400. Raw material in finished goods. How much rupees? 40,800. How I got it? 400 into 102. 40,800. It is 400 into 102. 400 into 102. All which has been discussed has been written as some notes. Everybody, yes or no? Now, next. Last point is regarding treatment of what? Conversion cost. I will discuss that and then complete this backflash costing with one more RTP sum to be done. Can I proceed or not? Now, please. Shh. Now, tell me, what is the conversion cost actually incurred? What is the conversion cost actually incurred? 7,23,600. No need to write, just listen. I am now saying version 1 and version 3 treats the conversion cost similarly. Version 2 treats it differently. That's the last issue. Now, these can be asked as an objective type question. Everybody following on? Now, every issue is covered which requires some understanding. Can I say? This is the last issue. Version 1, version 3 is giving a similar treatment. Version 2 is what? Different. Let us start with version 1 and 3. What is the conversion cost actual? 7,23,600. I'll tell the conclusion and then do the discussion. This is a cost or revenue or cost. Cost can be of two types. Product cost, period cost. What is a product cost? Those costs which are conserved for stock valuation. What is period cost? Costs which are not conserved for stock valuation. Right or not? Product cost expires only to the extent of cost of goods sold. Remains unexpired extent of what? Closing stock. Period cost expires what? Fully. Everybody, yes or no? No. See, when I treat this conversion cost as period cost, at what cost? Yeah, period cost. The entire 7,23,600 goes to current year costing P&L itself. Are you following what I am saying? If I treat this conversion cost as what? Product cost, a portion of this only goes to what? This year costing P&L. A balance goes to what? Next year only. Everybody following or not? The discussion procedure? No. I'm having some disturbances. Please listen. Can I proceed? No. Conversion cost, if I treat as period cost. Now, tell me if I treat this as what? Period cost. How much of this 720 goes to costing P&L? Fully. Nothing goes next year. But it has what cost? Product cost. How much goes to costing P&L? Only the extent of the cost of goods sold. The balance goes to the next accounting period. Yes or no? No. What they say is, version 1, version 3 treats conversion cost as product cost, and version 2 treats it as what cost? Period cost. Is the conclusion. What is the conclusion here? Version 1, version 3 treats as what cost? Product cost, and version 2 as what cost? Period cost. First conclusion. Everybody yes or no? That means in version 1, version 2, version 3, entire 723,600 will not go to what? Costing P&L. Only a part of it goes in. Yes or no? In version 2, what happens? The full amount goes to costing P&L is a conclusion. Let us see how it goes. Can we start or not? Now, see. Version 1 and version 3. Okay. Now, what is conversion cost amount? 7,23,600. Okay. I branch it into two. One is absorb to finished goods account. And next is what? Over absorption. Right or not? Please, yes or no? Tell me, how much is absorbed the finished goods account? Look at the account. How much absorbed the finished goods account? Tell me the amount. 7,50,400. 7,50,400 goes to what account? Finished goods account. And how much is the over absorption amount? 26,800. What over absorption? 26,800. This is very simple. This amount is what? Credited to costing P&L. Yes or no? Is credited to what? Costing P&L. Remember this. Can you or not? Now, the 7,50,400 is conversion cost charged to finished goods account or not? This is further branched into two. Conversion cost inside cost of sales and conversion cost inside what? Closing finished goods. Now, how many units cost of sales? 26,400 into how much rupees? 28 rupees. Now, tell me what is the number? 7,39,200. This portion goes into what? Cost of sales, which is there in the entry. Now, I wrote no by cost of sales 34,32,000. No. By cost of how much rupees? 34,32,000. How I got 34,32,000? 26,400 into 130. Correct? What is 26,400 into 130? 26,400 into 102 plus 26,400 into what? 28. That 28 only is how much? 7,39,200. Accept or not? No. So this goes to what account? Cost of sales. And in closing finished goods, how many units are there? 400 units. In how much rupees here? 28. What's the number? 10,000? 11,200. Everybody, yes or no? No. This number goes to cost of sales or not? From cost of sales goes to what account? Costing P&L. Goes to what account? Costing P&L. Up to this, everybody following or not? Now, tell me. Conversion cost, I debit, this amount is what? Debit. I debit the costing P&L. How much rupees? 7,39,200. I'll write here. I debit how much to costing P&L? 7,39,200. I credit how much over absorption? 26,800. Tell me the net debit I make in costing P&L is how much rupees here? 739,200 minus what? 26,800. I want a number. 7 lakh? 12,400. So the conversion cost that is going to costing P&L is what? 7,12,400. Out of 723,600, only 712,400 expired this year by going into what? Costing P&L. The balance 9,000 goes to what? Next year via stock. Respond, yes or no? In that case, tell me, entire 723,600 expires only to the extent of cost of goods sold expires, only to the extent of cost of goods sold expire. What is unexpired? 11,200. Here it is treated as a product cost. Accept it? This is same in version 1 as well as what? Version 3 if you observe. Can I or not? No. Version 2, let us discuss now. Next is what? Version 2. Look at the slide and tell me, okay, what is version 2? What are the conversion costs incurred? 7,23,600. No change. I have branched it into two. What are two items here? First goes to what? Cost of sales. Next goes to what? Next is called as what? Over absorption. Because see, there is no stock there. I absorb only when the goods are sold. Version 2. Kadapa. In version 2, any finished goods account is there or not? No. So what happens is, look at the version 2 correctly and tell me how much of the conversion cost account goes to cost of sale? 7,39,200. From here it goes to what account? Costing P&L. It is going to be debited or credited? Debited. What is over absorption amount? Tell me. 15,600. Will be debited or credited? Credited. To what account? Costing P&L. Yes or no? If you see, I debit 739,200. I credit what? 15,600. What goes to costing P&L? How much? 723,600. The full amount expires. So no. Now, in this case, it is treated as what cost? Period cost. It expires fully. In this case, I debit only 712,400 ultimately in costing P&L, and the remaining 11,000 is remaining undebited. Goes next accounting where it is treated as what cost? Period cost. Is a treatment of conversion cost. Yes or no? No. Another name for product period cost is product cost is called as inventoriable cost. What cost here? Inventoriable cost. What is period cost? Non-inventoriable cost. If they give that wording, one should be able to understand. Yes or no? No. In version 1 and version 3, conversion costs are inventoried. In version 2, it is what? Non-inventory. It is a period cost. It is a loss observation under the Backflash Costing system. Everybody following or not? Yes, with this, we complete all the discussions regarding the Backflash Costing system. Respond. Yes or no? No. Right now, next point number 10. Point number 10. Conversion cost treatment. Conversion cost treatment differs between the versions. 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 Can I start them? Now. Branch it into two. Branch it into two. Version 1 and 3. First branch, version 1 and 3. Second branch is version 2. Version 1 and 3. Second branch is version 2. Version 1 and 3, put the domain and write, treated as what cost? Product cost. Treated as product cost. Version 1 and 3, treated as product cost. Version 2, treated as period cost. Version 2 treated as period cost. Version 1 and 3 put a down and write expires only to the extent of cost of goods sold. Expires only to the extent of cost of goods sold. Second branch is what? Expires fully. Second branch expires fully. Second branch expires fully. Everybody understanding or not? No. Point number 10 11. Point number 11. The above can be understood as follows. We just explain the numbers for to understand it later during revision. The above can be understood as follows. The above can be understood as follows. In that right, version 1 and 3. Right, along with me, version 1 and 3. Version 1 and 3. 723 600. Version 1 and 3. 7,23,600. 7,23,600. Branch it into two. First branch, absorb to finished goods account. First branch, absorb to finished goods account. Second branch, over absorption. Absorb to finished goods account. Second branch, over absorption. Absorbed to finished goods account. Second branch, over absorption. Absorbed to finished goods account 7,50,400. You see the journal entry itself 7,50,400. What is over absorption? 26,800. Over absorption 26,800. 26,800. Over absorption put a down and right. Credited to what account? Costing P&L. Credited to costing P&L. Credited to costing P&L. What's happening? Please. What should I do? Sulupa. Credited to costing P&L. Go to the first branch. Absorb the finished goods account. Branch it into two. Transfer to cost of sales. Transfers to cost of sale. Next is in closing finished goods. Transfer to cost of sales. Second branch, in closing finished goods. Transfer to cost of sales. Second branch, in closing finished goods. What is transfer to cost of sales? 26,400 into 28. 26,400 into 28. 739,200. 739,200. Closing finished goods 400 into 28, 11,200. 400 into 28, 11,200. 739,200. Put a down here and write. From cost of sales goes to what account? Costing P&L. Write down. Debited to. Debited to what account? Costing P&L. Debited to costing P&L. Debited to costing P&L. Debited to costing P&L. I hope you are all following or not? No. Right. Next line separately. In version 1 and version 3. In version 1 and version 3. V1, V3. Okay. In version 1, version 3. The conversion cost debited net. The CC debited net. The conversion cost debited net to costing P&L is, the conversion cost debited net to costing P&L is 739,200 minus 26,800. Debited net to costing P&L is 739,200 minus 26,800 is equal to how much? 712,400. 712,400. The balance transferred to. The balance transferred to which year? Next year. The balance transferred to next year. The balance transferred to next year. The balance transferred to next year. The balance TR2 next year. Everybody yes or no? On the base of which I am dictating. Can I proceed or not? No. Even number. Point number 12. Point number 12. Version 2. Version 2. Conversion cost 723,600. Version 2. Conversion cost 723,600. Branch it into 2. Conversion cost 723,600. Branch it into 2. First branch, cost of sales. Second branch, over absorption. There is no finished goods account absorbed. Only units sold absorbed. Understand what I am saying? First branch, cost of sale. Second branch is what? Over absorption. What goes to cost of sale? Look at the double entry. 739,200. 739,200. What is over absorption? 15,600. Over absorption 15,600. Cost of sales goes to what account? Costing P&L debit. Costing P&L debit. Over absorption is what? Costing P&L credit. Over absorption is costing P&L credit. Costing P&L credit. Thus, the entire 723,600. Thus, the entire 723,600 gets debited in. Thus, the entire 723,600 gets debited in current year's costing P&L. Thus, the entire 723,600 gets debited in current year's costing P&L, and no part of it is inventoried. And no part of it is inventory and transferred to next year. And no part of it is inventoried and transferred to next year. And no part of it is inventory and transferred to next year. If you read the line given in problem number 5, will problem number 5 or not? In that C, they said, no conversion cost is inventory. That means what? No finished goods account, it won't be inventory. The difference is transferred as what? Under over absorption to costing P&L. Do you understand the meaning of that particular sentence or not? No. With this we complete question number 4, 5 and then what? 6. 1 minute. See, we have been doing this chapter, strategic cost management. So no, no. If we take stock of it, 1, 2 has been done. 3 is ditto same as what? 2. I gave us over. 1, 2, 3 over. 4, 5, 6 over. 7 I will do in the next class quickly. Okay. 8, 9, 10, 11, 12. All these are dealing with life cycle costing and total quality management. We'll be discussing the next class and the last class. And then 13, 14, 15. In which 14 has given us homework. 13, 15 has been what? Completed. 16, 17, 18, 19 and 20 has been what? Completed. In between we have only 4 problems to complete. Namely 2 in life cycle costing, which is very small sum, and 2 in what? Total quality management needs to be completed. Everybody yes or no? No. Now 2, 3 in total quality management. In that, question number 12, X Videosonics video company question is there or not? That is the current RTP's first question. Are you following or not? No. So these are all the areas to be completed. Next class we will complete the one more sum quickly in backflash costing and then start with the total quality management. Now.